Hey guys, I just want to bring up an opportunity for resource investors. If you want to rub elbows with the big wigs and talk to companies directly that are handpicked by Rick Rule, well, you got to be in Boca Raton from July 7th to 11th for the Rick Rule Symposium. The event has become a premier event in the mining space, and they're going to have some pretty big speakers like Robert Friedland, Sean Rusin, and the great Rick Rule. And also, we're going to be there. You can meet the deep dive team in person. So if you're interested in rubbing elbow with some of the biggest heavy hitters in junior mining, check out the link below. Good afternoon, everybody. Today I'm chatting with Tony Reda from Tectonic Metals. In this interview, we discuss what's been happening in the gold market, along with how China has been driving the price of gold through central bank purchases and retail buying. And we also get into Tectonic Metals, what the company plans on doing in the upcoming year, and their strategy for trying to make a major discovery. All right, everybody, enjoy the interview. Tony, thanks so much for joining us today.
Thank you for having me. It's a pleasure to be here.
So I'm not sure if you have been following this news, but it was reported last week that Stanley Druckenmiller has added to his position in several gold names, such as Barrick Gold, Freeport-McMoRan, and Newmont Gold. Now, I know you run a gold company, so I thought it would be appropriate to ask, do you think that we're starting to see some of the smarter money on the sidelines, some of those smarter institutional investors start to play in the gold trade?
Yes, I definitely think that's the case. When you look at the entire universe of investing in various stocks from blue chip right through to the Barricks of the world, I think the natural resource space, or more specifically the gold equities, represent a great value proposition. And we all know that's where you can make the most money as far as looking for these beaten up sectors that represent good value versus buying something that's completely inflated. And, the earnings per share to share price ratio is completely whacked. So I definitely see the value investor moving into the space, and the generalists, given the price in gold. I don't know if you also saw the Costco had the record breaking gold sales for a month. I mean, this is everyone on the international stage is looking at gold as a value proposition and a place where they want to perhaps hedge against, inflation, things of that nature. So the funds, the generalists, and I've had a few approach me that have never touched the space before, are now reaching out and saying, okay, can I learn more about your company? And also, what are some names that you fancy or think are worth taking a look at? And obviously the higher gold price presents an opportunity for the producers to really capitalize in the next corners and really excel and beat their guidance and their earnings.
Obviously geopolitics plays a pretty big role into what happens with the price of gold and the appetite for, we'll say, a safe haven. This news just sort of came across my desk this morning that Huawei announced that they're getting away from the Android system. This at the same time where we're seeing Apple sales in China to be dropping pretty significantly. Now, at the same time, we've got China buying up lots of gold, both their central bank and at the retail level. So it appears that China is decoupling from the U.S. I imagine that this is somewhat of a response to TikTok. It's hard to say at this point. I'm curious here. What do you think is happening with China? Do you think that this could be a move towards the BRICS? Do you think we could go back to some sort of currency that competes against the U.S. that's backed by gold? What are your thoughts right now, geopolitically? What's happening with gold?
Yeah, whether it's, let's just look even at Bitcoin or things of that nature, digital currencies. I always say, like, if you line up every currency on a table, and somehow you can place Bitcoin on that table and you put your bar or your ounce of gold, what is everyone going to grab? And I don't care what age you are, if you're a 10-year-old kid or a 60, 70, 80-year-old, if you're a sophisticated investor or not, everyone's going to grab gold. The next currency they're probably going to reach for is the US dollar. So now take that philosophy or that thesis and apply it to the world. And I actually just came back from Hong Kong and Singapore, and most of my conversations centered around, offtake agreements, how can I get access to bullion? And, these were multi-billion dollar entities that I was meeting with, and they emphasize just how important physical gold is to everyone. not just the central banks, not just to their family offices or their funds, but to individuals that are stepping out and buying physical gold. There is a lot of distrust in the world with government and things of that nature, and just the currencies are losing a lot of their allure, and so gold is really on the center stage. And China is leading the charge. They do want to shift away and back their currency with gold. And you see this in other non-US countries where the central banks have been the biggest consumer or buyer of gold. So I don't see that changing anytime soon. I do still have a lot of faith in the US dollar. I know that's more so because it still is the best one by default in many ways. And so, China, there's a whole conversation about them wanting to distance themselves, and it goes both ways. The irony is we kind of need each other in some ways. China needs the US, and the US maybe perhaps needs China to some extent. So there'll be an evening here at some point. But yeah, the demand for physical gold, or just gold in general, is going to just keep rising. And proof is in the pudding. The central banks are gobbling it up. Physical sales, bullion sales are going up. So I think that wave continues. And now we have perhaps the euphoria with the generalists, where Bitcoin previously captured everyone's imagination. There's now, a lot of talk and a little bit of hype starting to simmer around gold. So we'll see how this all plays out in the next little while here.
So this is the first time we have had you on here. You are with a gold company called Tectonic Metals. Can you give us a high-level overview of the company?
Yeah, definitely. We're a gold exploration company. We're focused in Alaska right now. That's where our assets are situated. And perhaps what differentiates Tectonic from a lot of other exploration companies is that we engage early with, in Alaska, for instance, with natives. We work specifically with one native corporation that's a for-profit entity. They're the largest private landowner. And we form production agreements on all our assets, which some might say is putting the cart before the horse, but I actually say it's the best way to move a project forward efficiently. And then the other thing that separates us is we actually have native shareholders. Our second largest shareholder has invested close to $4 million in our company, and they happen to be an Alaska Native regional corporation. So that's a bit about Tectonic. We have an excellent asset that's near the fifth largest gold deposit in the world, and it's kind of been forgotten on to many people, but nonetheless, this mineral belt has produced a world-class deposit, and we've now identified vis-a-vis drilling and some desktop work, an asset that has the potential to be a tier one opportunity. And for those that don't know, a tier one opportunity is 500,000 ounces of annual gold production over a 10-year mine life at minimum. So that's the bar we're chasing, and we think we have one that fits the bill.
So I was going to ask you guys, on your deck, you guys say that you're focused on mining opportunities, not on drill plays. I assume that means that you guys are whale hunting. You guys are trying to find a major discovery here. This isn't just about trying to find a news release to blow out shares.
Yes, that is one take on it, and I would just add something a bit further. There's a ton of mineral or gold occurrences out there in the world, but it's looking at that occurrence and saying, okay, does this have the potential to be a mining opportunity? Finding 1 million ounces of gold or higher is great, phenomenal. Many companies would give their left arm to do the impossible there, but finding 1 million ounces of economic gold, and that means it needs to come out of the ground to be really economic. And to do that in a profitable way, that's next level. So we look at our projects from economic mining opportunities, and we go through kind of a reverse engineering process where we ask the hard questions, and then we also follow up. So our actions reflect something that's more long-term focused and geared towards, tackling, is the metallurgy good? Would this be an open pit? Would this be underground? What is the environmental situation like? Are there any red flags? Community, First Nations, natives. We tackle all of those questions the best we possibly can up front. And so that's when we say we look at things from a mining opportunity, not a drill play. It's not just, hey, here's a mineral occurrence, let's step back behind it and drill it and hope for a good news release. And then it's like, oh shit, we're near a protected park, or oh hey, this stream is salmon bearing and it's in a protected, or the First Nations, or the geopolitical issue, we got to still work on that. Don't worry, it's going to be okay. We hear that a lot. Or I didn't do the metallurgy, but again, we know it's going to be good. Well, why not do all these things? And the reason why most companies don't do that is because these types of questions, when answered, can kill projects very quickly. And so a lot of companies want to kick the can down the road, or they're just not thinking of the project from that perspective. They're like, oh no, we just want to find it, then we'll worry about economics, because that's an engineering exercise, and so on and so forth.
So what can you tell us about the company's exploration strategy for, say, the Flat Gold project? Is it like, are there going to be drills in the ground this summer? What's the plan to go and find a major discovery?
Yeah, so I guess the first thing to note is that we actually have a plan. A lot of companies don't even have that per se. So we've rallied the entire team, and our team, just for those that don't know, consists of our chair is an environmental biologist that has actually been involved in the permitting of 9 mines. There's a common theme with our team, and that theme is individuals, not just geologists, engineers, lawyers, capital markets people, that have taken projects from infancy, i.e. never drilled before, right into production. Literally everyone on our team has gone through that path. And that path to get into production also involves permitting, environment, raising money. Can they raise capital? So we've put the whole team together and said, okay, what can we do to really move the dial this year on this project called the Flat Gold project? And so first thing that we're doing, we've developed a plan that is centered on de-risking and targeting new areas and also high-grade areas. So that plan involves, first thing, metallurgy. We're doing more metallurgy. So we've only drilled this property. It's been 1 year. Last year was our first year of drilling. Put 19 holes into this, and we hit gold in every hole. But there was 55 historical drill holes where we have all the assay certificates from the historical drilling and most of the historical drill core. So in our first year before we drilled, we did metallurgy, and we got those results, and it came back extremely positive. Those results were so positive that it's now prompted us to look at this project we were looking at it from a heap leach perspective, but to actually do formal testing that says, is this heap leachable? So that metallurgical program is kicking off this week. If we can demonstrate a heap leach opportunity, for those that don't know, heap leach mines, it's the lowest method for extracting gold from the rock. It's the lowest mining operation is a heap leach. Also, it speaks to potentially the economics of something. And if you can demonstrate a coarse crush or something that's heap leachable, from an economic perspective, it starts to tick a lot of boxes. Next up that we're doing this year for creating value, we've actually found historical drill core that wasn't fully assayed. This was in 2003. We have actual lab assay certificates, and this is very common with junior miners.
Mm-hmm.
They're cash.
Sorry to interrupt you. Yeah. I heard that was the story behind Great Bear. That
is. There you go.
When Great Bear was taking over the Dixie project, that
yep.
They bought it for like $150,000 for 50%, and then they got the rest for another $150,000, or give or take. Yep. They were walking around the property, and they just found all this drill core that had never been sent to the lab. Exactly.
Now, juniors are cash strapped. So this one company, Historical Explorer, in 2003, they plucked the eyeballs out of this drill core on what they think would run. And lo and behold, it did run gold. One sample, for example, it's a meter of 25 grams per ton. Another drill core sample in another hole ran a meter of 13.5 grams. And then another section was 3 meters of 6 grams. And then, there's some lower grade too, but nonetheless, some of these holes are 288 meters in length, but they only sampled meter intervals. So we've now collected that historical drill core. There are 4 holes, 750 meters approximately of drill core, and from 4 holes in 4 different areas of the property. And these areas are vastly underexplored. So that drill core literally got sent to the lab a couple of weeks ago, and we expect to get results in the next 60 days. That could potentially represent a new discovery without even drilling. even if it doesn't run gold, there is value in doing that because gold has a bunch of best friends, or as we call them from a technical perspective, pathfinder elements. Sometimes you find the elements to find the gold, and that's going to tell us a lot about the geological setting of these new areas. So that's the second leg of the stool as far as the value creation plan. The third is contingent on a financing. We have 2 drills at site right now. We could flip a switch and start drilling in less than 2 weeks, probably in a week, just to get the crew up there. We invested in the infrastructure last year to allow this to be possible. And that drill campaign will target areas such as these trenches that run 6 grams over 27 meters. We have 400-meter long holes that are completely mineralized with higher grade bits in that we want to step out on. And the rationale for these step outs, these are like typically 400 to 600 meter wide sections. We want to demonstrate to ourselves and to the market, if you were to start mining right now, where would that shovel go? These are near surface mining starter pits, the potential to be mining starter pits. And that would get your payback going, things of that nature. So we want to find those, we want to delineate those this year. Second objective of the drill campaign, we've identified through structural analysis, soil sampling, trenching, geophysics, lineament analysis, drone footage. We've established kilometer-long structures or targets that are screaming for a drill, but that could represent new discoveries. And for context, the property is 99,000 acres. It's probably about 30 kilometers or 40 kilometers in length. But these targets, one of them, for example, 6K by 5K in size. It's a round, quasi-round target there, geophysical anomaly. But these structures are within that. So kilometer long, like most deposits are like 500 meters or 400 meters. Yeah, some can be a kilometer long, but this is a kilometer long target with golden soil anomalies. And for, again, those that don't know, every time we've drilled, whether tectonic or historical explorer, underneath the golden soil anomaly, they've hit gold. It has 100% success rate. That's not the case for many projects, especially ones that have dealt with glaciation, where the soils have been transported away from the bedrock source. But a golden soil anomaly on our property, you can drill underneath it and hit gold 100% of the time. Geophysics works 100% of the time. So we have multiple layers of geological evidence saying that we're on something possibly prolific. And there's about 5 of these kilometer-long structures that we've identified. One, for example, has one drill hole, 16 kilometers of where we worked last year, that came back with 114 meters of 0.7 grams. But within that, there's 2 meters of 8 grams. Just one hole, sitting all by itself, begging for a drill hole to step out from. So these are the kinds of things that we've delineated for this year. As a shareholder, you will get access to drill results from new discovery and high-grade areas, and then from multiple targets, and then you'll get metallurgical data to support, is this an economic mining opportunity? And also, just to recap, the historical drill core that's getting sent back to the lab for assaying, that also provides another potential wind in our sails as far as creating value.
I want to ask about the cap table. My understanding here is that the share price is actually down substantially from 2020. And the reason that this is an important question is that, as you know, in the Canadian junior markets, there are a lot of bad actors out there.
Yes.
I'm less concerned when I see a company that's been trading for 4 years than one that recently started trading in the last, say, 3 months. Yeah. But I still have to ask the question. Yes. If I am a retail investor, how can I feel comfortable with the share structure, given that there are 330 million shares outstanding? And how do I know that if you guys do hit a big drill hole, my buying isn't just creating exit liquidity for somebody else?
Yeah, that's a great question. And we don't shy away from, if you want to call this a tough question, those types of questions. The reality is I'm not 6 feet tall. I'm not. Like, I can't hide what I am and what I'm not. We are an exploration company that each year has elected to dilute and put the money in the ground to create value. We didn't elect to sit on our hands. Let's sit this year out And, you know, it hasn't been a great market for a lot of exploration or early stage exploration companies, but we've demonstrated, and even if you look right now, last year we had a higher market cap and a higher share price. We delivered. We actually found gold in every hole down to 400 meters. So we're actually in a better, so now we have not only assays, we have 1.8 kilometers of drilled strike down to 300 meters, and we have geological knowledge that we can then apply going forward. You have to drill to find shit. I'm just going to be blunt. If you're not drilling, you're not finding diddly squat. And when you drill, you gain geological knowledge and insight what's below your feet. There's no way around it. If you want to demonstrate a 5 million ounce gold system, you got to go drilling. There's other things at surface that gives you indications, but at the end of the day, you got to drill. And so last year we raised over $7 million at 10 cents. That's 70 million shares of dilution. But guess what? Crescat moved into a controlled position. Crescat's a resource fund. They saw this project. They went from a 10% owner to a 20% owner. They believe in the asset. We believe in their support. Hence why the shareholder going into a controlled person requires a shareholder vote. Our shareholders said yes, do it. Secondly, we had like our native corporation step up as well and cut a check. These are people that are committed to the company and believe in the asset. So when we have 330 million shares outstanding, what I can tell you is that 50%, roughly 50% of those shares are held in long-term strong hands. The Tectonic team, the resource funds, were sitting at about 15%. We then have Crescat and Doyon at Crescat at 22%, the native corporation at 10%. So the public float is really about 175 million. And what we've also demonstrated is that our share price can move. It's not impacted by the shares outstanding. So, 2 years ago, we hit a low of 6 cents and then we ran to 20 cents. That's like a 300% return. Every time we financed or every time we went into the field, the share price has moved up. Last year, case in point, raised money at 10 cents. The stock went all the way up to 18 cents, hovered around 15 cents. That's a 50% return in a few months on your investment. So we as investors in North America, because in Australia and other jurisdictions, it's okay to have 500 million shares outstanding. What's happened in the junior mining space or the exploration space is that the cost to be public and the cost to actually explore has gone up over the last 10 years. Inflation has impacted us just like everyone else. Take that and marry it to low valuations. And now a lot of companies are raising capital at lower prices to do the same equivalent work they would have did 10 years ago, albeit at a much higher cost. So, having 300 million shares outstanding to me is the norm. It's if you were actually working, dilution is a necessary evil to create value. What we need to be asking, I believe, as investors, is what are you going to do with that money? Are you paying for haircuts and ties for Tony? Are you paying for me to travel, extensively and live a lifestyle program? Or are you going to put that money in the ground? And last year, 85% of the capital we raised went in the ground. And what I can say for this year, for those that are shareholders or want to participate in the financing, there's a clear use of proceeds and there's clear targets with sound geological evidence. This isn't a geophysical anomaly 600 meters below, and I believe we're going to hit this, like we're arm waving stuff. Like, take a look. This is not pie in the sky targets. This is where like a layman can look at these targets and say, oh yeah, I see 200,000 ounces of gold, placer gold, that's a stream or creek, spilling out of this hilltop. I see a golden soil anomaly where golden soils work as a proven exploration methodology. The geophysics works as a proven exploration methodology. And then we have historical drilling and trenching validating that this target is real, that we're going to now follow up on. So that's kind of my 2 cents. If you're looking to make 50% return, whether you have 300 million shares or 100 million shares, or whether you're 10 cents or 50 cents, to double that, say 100% return, it's a double no matter how you look at it. And I think investors are so fixated on this, share count. We make a discovery or we deliver on what we say we're going to do, the share price will perform. But more importantly, or just as importantly, major mining companies are going to take notice. Major mining companies, we haven't talked about this one yet, but we saw the merger with Newcrest and Newmont. So mathematically, 1+1 = 2. You take the market cap of Newmont, take the market cap of Newcrest. When they merge, those market caps should potentially add together. Well, they didn't. Their market cap is actually lower now than it was before, which highlights just how much value is offered in the space. But what this combination also highlights, you took a 4 million ounces per year producer, i.e. Newmont. You took Newcrest with roughly 2 million. They're now producing 6 million ounces. How are they going to annually? They have to replace that. They're not going to monkey around with 200,000 ounce per year deposits. They are going to go after large scale, 20-year mine life gold systems. And guess what? Flat appears to fit that bill. Yes, that's a forward-looking statement, but that's what we want to draw in ultimately. And they will start circling. They already are to some extent, but the point is that we have to drill to deliver, we have to dilute to deliver. And if you believe in the geology and you believe in the team's ability to execute, then we're potentially the right company for you. If you're stuck up on 300 million shares outstanding, well, you know what? We can't. You don't have to. I tell my son this, who's 16 years old and started dating. You're not going to marry every girl you date, and that's okay. You have to learn and explore. And so, same thing applies to our company. We're not going to be everyone's favorite company, and that's okay. It's your capital. No one should tell you what to do with your capital. And I'm not definitely going to tell you what to do with your capital. You have to do with what you're most comfortable with and find those right investment opportunities for you.
Okay, so Tony, last question for you here. If I'm an investor watching this or a potential investor and I'm trying to evaluate the company moving forward, what does 2024 look like in terms of potential news flow, catalyst, timelines, that sort of stuff?
Okay, so the most immediate catalyst, and there'll be news releases on this front as well, but the most immediate catalyst will be the historical drill core that wasn't fully assayed back in 2003 that we've now sent to the lab. We are feeling good that there'll be some mineralization. This is based on visuals and what we know about the system. No guarantee, but that would be the next immediate catalyst. And again, these are in relatively newer areas that we haven't really fully looked at. So there's going to be a lot of geological insight coming from those historical holes, whether or not they run gold or don't. We're obviously betting that they will, hence why we're sending them to the lab. Next big catalyst, metallurgical column test results. Now, the market may or may not appreciate the significance of these results, but I can tell you a major mining company will take notice, and we are definitely going to take notice. We believe this project's heap leachable. The last project we sold was a heap leach gold project in the Yukon for $520 million. We had 3 majors circling on that asset with offers to buy it. They want these types of deposits because they're lower operational costs, lower capex to build, lower environmental impact. We also want them for those reasons. So that's the second catalyst. The third catalyst will be a financing tied to a drill program. And even if, in that drill program, again, specific, detailed drill target pipeline of drill opportunities for discovery, for high-grade material. There's about 8-kilometer-long targets. Again, one has a drill hole just sitting all by itself, 114 meters at 0.7 grams, I believe, that we want to step out on, and then other targets to that extent. So even if we don't drill, I still think the value proposition that metallurgy and historical drill assaying presents is compelling enough. But our intention, because we have 2 drills at site right now, ready to go, is to drill this year and test those targets. And we're going to do everything in our power to make that happen.
Well, Tony, thanks so much for hopping on here. I think you guys have a very interesting company, and I believe we are in the early stages of a significant gold market. I don't think that what happened or what's recently happened in China and in some of the other with some of the other central banks is just an anomaly that's sort of a short-lived thing. I think that we're heading towards some sort of new paradigm where gold is going to become much more attractive, and companies that are out there seeking big projects are going to be interesting for retail investors, and more specifically institutional investors that are real institutional investors and are actually going to deploy real capital into real projects, not like some of these hedge funds we have in Canada that are really just looking to clip a spread off some retail liquidity. So I appreciate very much you hopping on here, and hopefully as you guys get some more results and the story continues to develop and you guys make that major discovery, you'll come back on here and tell us about what you found.
Thank you. I'd love that, and I look forward to doing that with you.
Perfect. Thanks, Tony.
Thank you.
All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.